brokerage firm. Number 4. Stocks. Stocks are not as complicated as those Wall Street firms make you believe. Stocks are an easy way for you to own a percentage of a publicly traded business. If a business issues 10 million shares and you own 1 million of those shares, you're a 10% owner in the business. This incredible breakthrough in financial instruments has allowed the average person to own a stake in some of the most lucrative companies of our day, with very low entry barriers. Here's how much you need to pay to purchase one share into these companies. There are many platforms out there that allow you to purchase this type of share and invest it in the stock market. The most common and trending platforms for buying and trading stocks right now are Plus 500, eToro, Trade24, Robinhood, Revolut, and so on. By the way, we're not affiliated with any of these companies, although they should reach out since it would be a great case study breaking down how to make money using these platforms. We'll keep an eye out for an email. Number 5. Mutual and index funds. If stocks allow you to purchase shares in a company one by one, mutual funds and index funds bring in multiple companies together, so you're buying into the entire basket of companies as a whole. Why is this better? Basically, you're more diversified, so it's a safer investment to make. Statistically, index funds are the best performing asset class. The 5 most popular index funds are the following, in no particular order: Fidelity Zero Large Cap Index, Vanguard S&P 500 ETF, SPDR S&P 500 ETF Trust, iShares Core S&P 500 ETF, and Schwab S&P 500 Index Fund. If you want to start buying stocks one at a time, you're statistically more likely to screw up. You're not going to be one of those miracle traders that beats the market year over year. You don't have that kind of info, and it's super complicated to try and compete with the big boys. That's where index funds come in. S&P 500 brings together the best 500 performing companies. When a company falls off the top 500, it gets replaced with a new great performing one. The average annualized total return for the S&P 500 index over the past 90 years is 9.8%. Out of the 5 mentioned, Vanguard is our top pick. Index funds should be in every portfolio of everyone who's looking to build wealth long term. If this is something you're interested in, the best resource available for this is a book by, surprisingly, Tony Robbins called Money, Master the Game, in which all of this is broken down for you. We recommended it to our parents as the go-to resource for retirement. Even better, if you go to alex.com/freebook and this is your first time signing up, you can get the audiobook version for free thanks to our friends at Audible, who've been so generous enough to continuously support our community, unlike all these other brands we've included in the video. Get the book, listen to it, and you'll understand everything you need to build wealth in a safe and smooth way.